Aisha, there is just so much of FOMO that it is leading to desperation now. Yeah. And very rarely you see confluence of so many factors coming together, which is that global flows are back because of local growth. Valuations in large cap stocks are not stretched. Fed has indicated rates would come down. Dollar index has suddenly collapsed. And if that was not enough, guess what? The 10-year paper has come down from levels of 5% to sub 4%. Now, rarely you see confluence of so many factors come together. And when you typically see, when all the ducks are aligned in one direction, then you typically will see the FOMO effect or the desperation effect. So there is definitely an element of the catch-up fever. There is an element of momentum, and this entire desire perhaps to buy even at higher levels, I think, is really fueling a lot of market price action. Rarely you see this, Aisha. I mean, over the years, we've spent so many years in the market. When did you see this kind of a combination where FIs, they came back, global Qs suddenly turned, yields, they collapse, dollar index came down, and then if that was not enough, crude also came down. Yeah. All these factors are just they've just cemented together. Yeah. And there
but that's the thing, that it's so picture perfect across the board that you feel, why shouldn't you be participating and why should you be underinvested? But looking at the valuations, and I'm not talking about individual sectors like IT, etc., but the overall market is telling you that you can't be putting fresh money to work at these levels in those discovered names. So you're in a bit of a sort of flip-flop in your head.
So large cap stocks are giving you this again and again margin of comfort, which is that, look, we are not expensive. If you are invested, stay invested. If you buy large cap stocks, maybe your future return actually becomes slightly diluted. But there is definitely a case that in next 6 to 12 months in large cap stocks, you may not make a double digit return from these levels, but you can actually make a 6 to 8% return in next 6 months, which actually is not a bad scenario after the recent run up. So Aisha, what has changed? You got this FOMO crowd and desperation which has kicked in, and nobody wants to sell. Yeah. So there is it's like saying the buyers are on a strike. And that is what the markets are all about. Sellers are on the strike. The sellers are on the strike. So that is the setup of the market. Now, what do you do in this market? We'll talk about it, but that's the setup I'm explaining.
Yeah, all the factors really working in favor. To add to that, by the way, it was a stellar rally that we witnessed on Wall Street overnight as well. It was new record highs for the US markets. So that's what we're working with this morning. The Asian markets as well are following suit. And it's also Chinese data that has reported the fastest industrial output growth in the last 2 years. So all of that really boding well of the trade setup for our markets, but that of course is for this morning with the Nifty implied open at 21,423. But it's also one of the pieces of the puzzle that was a bit of a concern for quite some time, and that is the FII holdings. And with respect to the kind of positioning that we've seen so far in the month of November, what we've been seeing gradually trickle in for the month of December as well, it seems that FIIs are returning, particularly post the state polls, and this is a key component, Nikunj.
Let's look at the data. I mean, what kind of numbers are we talking about? And that, I think, in a sense, is reminiscent of the kind of momentum we're talking about. In December so far, the number now stands at 20,000 crore.
And it's only the 15th. We're halfway through.
Yeah. 20,000 crore. Yeah. And I think we are in for a grand...
They're also making up in a hurry. There's FOMO there too.
Yeah.
There is FOMO, and there is perhaps this, like I said, that these things rarely happen. Rarely you will see, even in best of the bull market, this kind of a combination, this kind of a permutation combination rarely comes through. So that is the point I'm saying, that this is an extraordinary, you may want to call it the Goldilocks scenario. You may want to use, in Hindi terminology, the Navgrah coming together, but rarely you see confluence of so many factors, they come together. So I'm not surprised that there is a desperation and the sellers right now are on a strike. Now the point is, you got to understand what you do now. Let's spend some time on that. Look, if you are a hand-on-heart trader, and I say this with some thought and with some sincerity, I think don't chase the Nifty now. because what Nifty is doing, that it is really building on, and there are a lot of gap up starts, and history has told us that this kind of a price action is unlikely to sustain. So don't chase the market now, wait for the market, and the market will not give you a big decline in large cap stocks. So if you want to buy on a bad day, and the bad day could be a bad Monday or a bad Tuesday. I don't think we are in for an ugly patch. The downside in this market in the run up to the election looks limited and restricted. So you are in that phase of the market where if you buy a bad day or a flat day, you actually would be rewarded. The downside in the market is limited and restricted, but if you're a hand on a heart trader, if you are chasing the Nifty now, if you've ignored all our channel advice, then please follow this channel advice that don't chase the Nifty at this current level, just wait for that bad day. Where I'm surprised is actually IT. I never expected IT to make a comeback, but IT has made a resounding comeback, and that is where I think I'm really surprised.
Yeah, I think that's got to do with the kind of commentary we've heard from the Fed, the fact that inflation easing, growth numbers picking up, that sort of giving some confidence to IT spends going forward, perhaps. Or just catch up with NASDAQ. I mean, who knows? That's been one of the best performing indexes year to date.
Yeah, so that's the consensus view that NASDAQ has gone up, IT should go up, but that's the wrong consensus. That's the wrong correlation. Similarly, US economy is going to slow down, which is what the Fed has said, and that's the reason why they've cut rates. Obviously, it means that there is going to be more challenging environment for IT. Look, IT has got hit because of AI, and now then they got hit because of Europe, and now will they get further hit because of a slowdown in US? I don't know. As of now, IT companies are putting a brave foot forward and saying that, look, AI is transient in nature, we are getting large orders, but the number and the delivery is not there. So I don't think this is a way where you want to buy into IT. The focus has to be more inward. The focus has to be manufacturing, financials, to large extent autos. I will not be surprised if construction infra also picks up, because what's the theme for next 6 months, Aisha? Before Diwali, it was all autos. I think the theme for next 6 months would be look out for governments which will benefit because of high government spending. Government will spend more because they have a balance sheet to spend more. Elections around the corner. The rural economy needs infusion, and that infusion will come via government spending.
Yeah, so that capex